Per usual, everything on this channel is for educational purposes only and is not intended as financial advice. September is over. It is the first day of October. Happy October. It is also Sunday. That means it's Setup Sunday. Let's take a look at mainly Bitcoin. It's really what Setup Sunday is for, but there's many ancillary charts that are also quite interesting on the crypto and legacy side. Starting off with just the monthly return data. As most people are aware of by now, the seasonality for September for Bitcoin and Ethereum historically has been negative. We actually closed positive 4% on Bitcoin, positive like 1.5% on ETH in September. So we did much better than historically we have. It's the first positive September for Bitcoin going back to, I think, 2016. So we had an unusual September. Now, October and November for Bitcoin are the best months of the year. And you'll notice Q3, everything kind of sags in the middle, right, of the year. And ETH really turns it on in the beginning of the year, historically. So yes, we have some ETFs, futures ETFs coming probably tomorrow for ETH. A lot of interesting headlines and hype around that. I don't know necessarily how much that's going to move the needle right now. I think it'll matter much more post Bitcoin halving. Bitcoin halving is great for Bitcoin, but it's even better for everything that isn't Bitcoin historically, because it just brings liquidity. It's a liquidity injection into the ecosystem. Brings eyeballs, brings attention, brings people, headlines, right? And you've got this hot ball of money moving around. And that's how alts generally get moving, not in this period. In this period when we're pre-halving, liquidity is down, flat, unexciting. It's very hard to get anything going in general, especially things that aren't Bitcoin. So we are coming into a positive tailwind finally for seasonality, mainly for Bitcoin. The only thing, that I think is going to disturb the force, if you will, punctuate the equilibrium here, is headlines around ETFs or excitement around certain institutional products. Bitcoin on the daily zoomed basically out as far as you can, okay? Let's look at the 2-year MA and the 2-year MA multiplier in the red, halvings in the vertical bars there. And we are exactly where you'd expect us to be pre-halving relative to the 2-year moving average, the green line here. We are still below that level, and we may even return to that level should we have some sort of black swan negative event in our future leading up to halving. Even prior to post-halving, I wouldn't rule anything out, right? But where this looks here, to me, is exactly where you'd want this to look before you're actually in a bull market. We're working on the reversal phase for the first 9 months of the year. So we are still in inning 0 of the ball game. The crowd is still trying to figure out what time the game starts, okay? We are that early still. So we got plenty of time. Top side, 160, 250. Whatever it ends up being, it's super early to try to understand where that might be based on the 2-year moving average multiplier. Now, if we look at the power law corridor, slightly different. This was created around late 2018, I believe. Again, exactly where you'd expect us to be pre-halving. I also have the 200-week moving average on here. But we're exactly where you would expect us to be pre-halving. We're in the bottom band. Things haven't started yet. There's no guarantee we will reach the potential target. You can see how that looked in each of the halving cycles, but that's a pretty good guess of where we might go. If I had to bet my money on it today, I would say I'm looking at the power law corridor, even though we didn't quite reach that level in 2021. I still like that as a potential level. And while we're talking about moving averages, the 20-week is here, the 200-week is here, the 200-day is here. Pretty much it's a party, okay? Everybody's here. They're all drinking the punch. And all the moving averages are smack dab at the price. So in fact is the weekly cloud, which we have a definitive close within the weekly cloud. We had potentially an inverted hammer last week that confirmed this week with the bullish engulfing. So far we've seen things we need to see, at least I need to see, to be somewhat convinced that this is real. Now we don't have a macro pattern, chart pattern, anything going on here that's necessarily on our side yet. You could argue we're in the process of invalidating potentially the head and shoulders we created throughout the year, right? I still think this is super early to be confident that this is where this goes to 42. I mean, this is the level we're looking at. So your first stop loss would be the cloud. The second stop loss would be the Kijun on that trade. But we can also use trailing stop losses, which I'll get to in a second, to maybe fine tune that a little better beyond just using the cloud. Something that we have to really, really be careful of in 2024 is this second flat line we're making on the cloud. Pretty unusual. We get two flat Kumos here because this says on extremely high time frames, there's a 50% retracement up here. And we've also created a 50% retracement, a very defined and distinct range to give us a flat Kumo somewhere around, let's say 25, 26, right? So we very well may go to 42 and go to 25 sometime pre-halving. I wouldn't rule that out. That sounds insane. It's certainly possible based on just being in the cloud and reaching for these edge-to-edge levels on high time frames. And before you get too excited about 42K as a level, this is a multi-month trade. This isn't a day trade, okay? This is potentially an end of the year target, potentially a pre-halving target. And then, we'll see what happens pre-halving, but we could be sub 42 post-halving, and that would be the level as well. I think 3 months, though, is a good guesstimate of how long it might take for us to get there. Now, depending on your views on legacy, on rates, you might be thinking, like I am, by the way, there's no way we're going to get to 42, especially if everything starts to melt down, rates go higher. Things could get extremely ugly, and we have to dodge that. We have dodged it so far. We were +4 on the month, S&P -5. That's a good start. Okay, we have to keep doing that. So we have uncoupled sort of fairly nicely. It's, again, super early, but I'm seeing what we need to see going into a positive seasonality, right? Let's say you don't like the cloud, fine. You don't like power law corridor, you don't like 2-year moving averages, whatever. You can use the pitchfork as well. Basically tells you the same thing. It doesn't get you to 48 quickly. It gets you to 48 actually post-halving, it looks like. But it's a good sign that we're acting as a magnet back to this midline here. We supported where we needed to. We're back above the yearly pivot. So at the very least, 26.7 to 38. There's a decent trade that the pivot's like. The pitchfork along with the cloud gives you some sort of, time frame as far as expectations. So even expecting 48 by the end of the year would take some doing relative to the rate of change since basically FTX blew up. Looking at the daily cloud, we're still below the daily cloud slightly. As I said, I think Monday last week or Sunday or Thursday, whatever it was, 28 is certainly the level. We're in this range now where for me, I start to lean bullish on the lower time frames above 28. Sure, but ultimately, we could revisit 30 for a third time, get denied, and then chop around, right? We could just continue to do this until halving. Maybe that's max pain, 25 to 30 the next 6 months or whatever it is, right? So I wouldn't count that out either. There isn't a lot of bullish evidence here necessarily, right? It's good that we didn't break down. It's good that we're back above the cloud maybe soonish, but there's nothing that's screaming at me. This is obviously going to be a massive bullish move. Now, if in a couple days we're back above the cloud with the bullish TK cross, right? That's good enough. But ultimately we need to be above high. We need to make higher highs, right? I mean, that's a no-brainer. One piece of evidence for the bullish pile is something I talked about last week, which is the possibility that this was an inverted cup and handle. Most people are going to disagree with, but that's fine. That invalidation criteria is also at 28.4, thereabouts. So we're starting to push momentum towards the bullish side, out of the neutral side, but ultimately, we're kind of stuck between a rock and a hard place. High time frames say, yes, everything's fine, looks great. Daily time frames, still very much kind of neutral, not quite there. Now, if you want to zoom in a little bit more and look at some lower time frame moving averages, if we look at the alligator fractal stuff, we have printed a bullish alligator cross with a breach of the previous fractal resistance. So this is a go long signal. The first go long signal since probably mid-June. It's really been that long since we were making higher highs along with the moving averages being on your side here, right? Everything from then to now, we've either made lower lows or we've failed to hold those highs. So this is a good sign. Maybe I'm too bearish, right? I don't know. But I'm just not quite convinced. And now let's say you want to check out the alligator fractal stuff on the weekly. We're also starting to flip the weekly moving averages. So again, the ball game hasn't started yet. But we are resetting momentum of the past 9 months. We're trying to make a decision here. We're neutral at best. Ultimately, the fractals give you resistance at 30K, support at the lower low, and that doesn't tell you anything new, but it does help you quantify where support and resistance may be. And if you pop that on the weekly cloud, instead of using the alligator, we can use tried and true 2061, 2030 for the cloud, along with the fractals, and that gives you an additional trailing stop loss. And we can check how did that perform in 2015 and 2016 when we had that edge-to-edge trade. Again, this takes months. Look at how many months this took. Now, we were in a massive 250-day ascending triangle, but based on the fractals, it actually gave you a great entry way before we actually broke out, right? Way before that ascending triangle broke out. What you're looking for going forward is a resistance fractal and then price moving above that, right? So far so good with the edge to edge. We're in the cloud, bullish TK cross. We know where our stops are. For further confidence though, I'd love to see a chart pattern or a fractal breach like this. Before I talk about ETH, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with a link in the description of this video. And if you're watching this video and you're crypto native, you're ready to front run all these institutional folks who are just now getting access to this stuff. Because for the most part, as a retail trader, you're able to go into someplace like Kraken and get all sorts of fun stuff, right? Bitcoin, ETH, Solana's up 12% today, Rune doing well, a few other alts popping off. But really the first thing I always notice on this is where does Bitcoin sit in the volume? And for the first time in a long time, we are the top traded pair on Kraken based on daily volume. So far so good. Early, but so far so good. Now it does look like we avoided a government shutdown for the next 45 days. There were some interesting dynamics there where the government shutdown was forcing the SEC to make decisions on certain things ahead of time. The good news for ETH is it looks like the futures ETFs, not the spot ETF, but the futures ETFs will probably launch tomorrow. The bad news for Bitcoin is the chance for the SEC to appeal the GBTC ruling was mid-October. Potentially the government shutdown would have nullified that, but now that the government will be open, the SEC has a window still to try to appeal that ruling. Now they may come through that date, I think it's the 17th or something of October, and we don't see an appeal. That's great news, but that's one other thing we need to dodge, on the BTC side of things. So the pros for all these products is there's going to be tons of advertising, right? You've got VanEck, Bitwise, ProShares, etc. selling this stuff. Some of these are mixed. Some of these are pure ETH. I just don't know how many institutional folks are necessarily going to get excited about this product offering specifically, but maybe it's enough to start to bring people back to the table. I don't know. Honestly, I think it's still probably too soon for institutional to care. I think they're waiting on the BlackRock spot ETF. Looking at the ETH TA on the daily, we're still doing our best to try to recuperate this ascending triangle. Volume's still relatively flat, unexciting. Ultimately, I don't want to take a big trade on ETH until 1990. Now, let's say you're bullish, you think ETH's going to infinity. I think if you're those people, then you DCA and you keep adding all the way down to 1,000 and then you start to panic. But until then, I think you just assume we're going higher and you assume liquidity is going to come back and you assume Bitcoin's is going to be bullish for ETH in some way. And you just kind of ignore price action. If you want to be a little more tactical, I like the 1990 level. But either way, those are some strategies to employ here. Now, I was short from September 6th until I think Thursday night, because that's when a bunch of the futures ETF announcements were rolling out. And I was worried for my short for this exact situation where it may not really mean much in the near term, but just some sort of positive headline on the regulatory front for ETH, for anything in the ecosystem, would be bullish for price in the very near term. And we'll see how next week goes. We'll see what the flows look like. We'll see. But this potential ascending triangle failure, maybe it saved itself. You know, there is a tiny Adam and Eve here, but I did take myself out of that short before anything got too crazy. And this could just continue to chop, right? It could continue to chop and just do nothing until next year, right? Like it doesn't have to do anything. I don't think there's any grand evidence for bullishness here necessarily on ETH. Really the 3-day cloud, the weekly cloud, right? These just don't tell you too much. Now we're still in the 3-day cloud. I'd start to get bullish if ETH starts to close above the 3-day cloud with the bullish ticket cross. Historically, that has had a pretty good hit rate because you don't see that too often, right? You don't see us above or below the daily, 3-day cloud. This was COVID, obviously, but you don't see us sort of wavering in and out of the cloud for the most part, unless it's a real deal breakout on this time frame. So that is something to watch. But again, 1990, 1850, whatever it is, that if we need to get above that, we need to make higher highs. And the weekly doesn't tell you too much because, you know, we could like move through this scoop on the weekly cloud and wait until next year entirely until we're in the cloud. So I think the ETH pair as we stand right now is plenty of time before it makes the real move. But I can see obviously people are positioning for a move higher. ETH BTC did get a little bump on the news of the futures ETFs. Still refuses to make a higher high. Still in the weekly cloud. Still in the weekly channel. Wouldn't expect a miracle out of this thing anytime super soon. So net, not too much has changed with ETH other than the expectations for immediate doom have probably moved to the wayside in the near term. You know, we'll see what this week brings. There have been some moves on Sol, just to talk about this real quick. Again, the 3-day cloud. All this stuff has been ranging for so long. Any low time frame trend metric probably isn't going to tell you much because it's just going to be crisscross. This could be just another crisscross of some 1050 daily moving average, right? Who knows? But on the 3-day, if towards the end of the year, and that's when alts typically do better, again, if you think, okay, Bitcoin gets exciting, price appreciation, eyeballs, money in the ecosystem, alts usually follow that, and that usually pushes the alt moves to the later months after Q4 or around January, right? This could be an ascending triangle as well. So I don't hate it. I just think it's a little too early for Sol. And on the pitchfork, you know, maybe this is it. Maybe this is the move, right? Doesn't look horrible. I'll give you that. Link still ranging, reached that range high around 820 or so, pulled back so far. Has looked extremely strong since the bottom, but here's a great example of using a low time frame trend metric, right? Because it'll crisscross, red green. Eventually, I like 12 to 14, eventually, but in the moment, still range bound, but does look decent. And again, maybe Link ranges another 6 months, imagine that, and doesn't actually move until the Bitcoin halving, right? Here's the weekly cloud, not even close to being in the weekly cloud, still has a bearish TK cross. Plenty of levels to watch eventually, months from now, right? And as long as this continues to range, I do like eventual higher highs. Eventually, yeah, 21, right? Is Bitcoin going to be at 150K when Link does that? I don't know, but that's a level to watch going down the line, right? So for once, crypto actually looks like it has a pulse amazingly. And you'll notice I didn't start the video with talking about legacy. Thank God for that. So let's talk about oil. Talking about the Adam and Eve now for, I don't know, it's got to be weeks. We dodged head and shoulders on oil, which probably isn't a good thing. But we're in the midst of another rollover. Again, the actual timing of this, is difficult because logic would tell you they're cutting supply, demand is at an all-time high, we're coming into the winter months. Like, it doesn't make sense logically why this would roll over, but these are the technicals I would watch for, or am watching for. We had a previous head and shoulders that didn't break down, was invalidated. We're potentially setting up for, within the next couple weeks, a right shoulder that everyone and their mother will be watching, I guarantee you. And there will be an expectation that that breaks down. Whether or not that happens, I don't know, but this is just something to watch for within the next couple weeks. You'll notice at the apex here, we had some mix of inverted dragonfly, shooting star, very similar to the top of the head in August, where we had maybe more of a gravestone doji. But in any event, so far, it doesn't look like we're going to get strong bullish continuation on this. So this is definitely, something to watch for on oil in the next couple of weeks. And not only have we dodged a negative S&P month, but we dodged a negative gold month. And that is super powerful for the narrative, at the very least, to present to institutional folks like, look, you've got shiny rock, which is selling off. This is what we expected. I expected Bitcoin and ETH to do. Still looks bearish. Looks awful, right? Looks like it's definitely headed, to me in the moment, like it may take a couple weeks, but it looks like it's headed lower, no doubt. So it's super bullish for Bitcoin if we can continue to dodge the bombs blowing up around us, right? And we also had DXY pulling back a little bit. Maybe this is ready for a TKC clamp. Maybe this rising wedge will actually mean revert to the 200-day moving average. But I can tell you what we don't want to see. We don't want to see the dollar go to 107, because eventually there will be a time when we snap back and recognize this inverse correlation once again and have a nice little meltdown on our hands. So we really don't want to see 107 or higher. Maybe that's max pain for everybody. Rates to 5.5 on the 10-year, dollar to 110, right? So trend-wise, Dixie looks fine. I would just watch for a slowing of the trend at the very least, hopefully. Now, as far as the S&P and the NASDAQ go, both of these to me are in Chopville, USA, with a bearish lean to them. The S&P broke down from its head and shoulders target. It's through the cloud. We may get a bearish cloud twist this week. Didn't quite hit that 200-day moving average and pretty far away from that sub 4,200 level based on the measured move of this head and shoulders. So I know everyone's watching 4,200. So we'll see what happens if we get that level. But my legacy stack right now is really in love with short-term treasuries, okay? And until we are below 4,100, I'm going to remain in short-term treasuries unless we get back above 4,600, right? And you can say the same thing with the Qs or the NASDAQ. We're in the cloud. It's a mess. We haven't fully mean reverted. There's a bearish pattern on this. Until we try to make a higher high, this could continue to just chop, 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 chop. So I'd either want to see a full retracement of, I guess, AI mania, okay, or a move above 380 for the Qs. And then there's TLT and rates, which do not look bullish price-wise. The yields look extremely bullish. If we're just measuring range high to range low with the fibs, 5 to 5.5, sure. I mean, that's logically where this might go. And the trend looks fine, right? There's nothing you can necessarily point to here. Yeah, this looks parabolic, but it looks like it's still well on its way to making higher highs. So again, maybe that's max pain for everybody. TLT just continuing to melt. This is 20-year Treasury ETF. Now, if crypto continues to dodge this, right, that just builds this narrative even more. Whether or not it's BlackRock, whether or not everyone's waking up to the death cycle, I don't know, right? It doesn't matter. But these are nice anecdotes and little pieces of evidence that when everybody's selling their 16 ETFs, right, they can go, oh, by the way, look at this. We outperformed the S&P, the NASDAQ, TLT, right? We're not correlated to this stuff. That's a powerful story and narrative in and of itself. So that's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.